Bismillahirrahmanirrahim. Session Chairman Mr. Amir Abbasi, Guest Speaker Mr. Yusuf Hassan, fellow members, ladies and gentlemen, Assalamu alaikum and a very good afternoon to all of you. My name is Adnan Rizvi and I'm the Honorary Secretary of the SRC. On behalf of the SRC, I would like to welcome you all. The agenda for today's session is depicted on the screen. Just have a brief look at it. I'll begin the formal proceedings by a recitation from the Holy Quran. Bismillahirrahmanirrahim. Qul huwallahu ahad, Allahu samad, lam yalid wa lam yulad, wa lam yakun lahu kufuwan ahad. Sadaqallahu azim. Before I invite the keynote speaker whose brief profile is depicted on the screens, I'd just like to say a few words and give you a background of this session. As you can see from his profile, Yusuf is an internationally acclaimed IFRS expert, having conducted many IFRS trainings, both in Abu Dhabi, Dubai, and other places of the world. He has delivered presentations and numerous seminars. One fact which is not mentioned here is that Yusuf won the 2013 ICAP Award for Excellence in Training of Finance Professionals. As such a high-profile IFRS trainer was in town, we always know that IFRS is a topic on which our members are very keen to attend seminars and conferences. So we requested Yusuf, and he was very kind to accept our request from his brief visit and take the time out to share his expertise with our members. Please welcome Mr. Yusuf Hassan.
Assalamu alaikum. Good afternoon, ladies and gentlemen. We live in interesting times. The only thing that seems to be permanent is change. If you asked me at the beginning of the year, would you have expected Brexit to occur? I would have said no. If you asked me who would be the President of the United States of America, or the next President of the United States of America, I wouldn't have said Donald Trump. The world is in a great state of change. The world is in a great state of flux. Consultants call it disruption. The accounting world is no different. We are in a great, great state of change. I've been working with banks for the last 6 months on IFRS 9. IFRS 9 is a game changer. It's going to change the way banks do provisions. IFRS 15 is a new standard on revenue recognition. It's going to change the way we do revenue recognition. In fact, to such a degree that I feel some of the textbooks at university may become obsolete after IFRS 15. They change one thing. Let me give you the punchline now. They change one thing. All our lives, when we've been talking about revenue recognition, we have focused on revenue recognition being, or revenue being recognized when we transfer the risks and rewards of ownership. That has now been relegated to a sub-indicator. They've changed one word. They're saying now the primary driver for revenue recognition is the transfer of control. And because of that one change, there is massive implications for people. You know, Donald Rumsfeld, he was the Ministry of Defense in the Bush administration in US. Donald Rumsfeld used to say, there are known unknowns and there are unknown unknowns. Do you understand the difference between those two? A known unknown is things I know that I don't know. And then there's unknown unknowns, things I don't know. Now, I've been talking to many clients in the last few months, and clients are worried about IFRS 9, rightfully so. Clients are worried about IFRS 16, rightfully so. But I think in IFRS 15, they're missing a trick. Because this is also going to have a significant impact. It's a standard on revenue. And which company here doesn't have revenue? If you don't, you're in trouble. The point I'm making is the revenue standard is changing to such a degree that developers have decided to early adopt the standard. They love it. They absolutely love it. Companies like Emaar, Aldar, Damac, DR have all early adopted IFRS 15. On the other hand, we have entities who don't want to adopt it, are hoping to postpone it. Telcos, for one, have been struggling to get their hands around IFRS 15. And you know what I'm saying? The unknown unknowns. Construction companies think it's going to be the same as before. You see, the problem with revenue, and I'm going to talk about revenue a little later, it's the most important line in the income statement, right? But it is probably the worst accounting policy that is disclosed. I can tell you now what 80% of your accounting policy is on revenue. I'll tell you. You are writing that revenue will be recognized when it is probable and when can be measured reliably, isn't it? That's in the standard. It's the most important line. It's the weakest standard. The standard is weak. IS 18, IS 11 is hopeless. It's contradictory and there's so many problems. Yet, our accounting policies are weak. The accounting around revenue is divergent. People don't have it consistent. For the same transactions, two telcos would account for the same transaction differently. So it's a big issue. IFRS 15 changes revenue recognition from a risk and rewards approach to control. It's going to change other aspects. You see, the big thing with revenue recognition is not so much how much revenue is being recognized. It is the period in which you recognize the revenue. That is important. The period. When? You see, what could happen under new IFRS 15? I envisage 4 scenarios. Scenario 1, you recognize revenue as you did before. I haven't seen too many cases like that. There are, but I haven't seen too many. Then the other scenario is revenue could be accelerated, brought forward. I've seen this in real estate developers who we helped early adopt the standard. They have enjoyed IFRS 15 because it brings them back to percentage completion. There are others who are going to defer revenue. And the fourth possibility is you are going to have to break up a contract in ways that you never expected before, and your revenue recognition is going to change. So I'm going to be discussing these changes with you. I'm going to give you, in the time that I have, I'm going to give you a very, very high-level overview of these things, just to give you a sense so that you get ready. You know, the new accounting standards, they are massive game changers. Unlike IFRS 7, IFRS 8, which, as a standard, you could get ready when the auditors came, isn't it? IFRS 7, on 31st December 2007, you could have been ready for it. IFRS 9, banks are still preparing. They have been preparing for the last 2 years, and I don't think many banks are even closer to a number on impairment. It is such a big change. And it's no longer just an accounting change. The message I want to put forward to you is that the change is pervasive. The business is going to change. The way people look at financial statements. Which brings me on to my first topic. I mean, I have jigged the agenda a little bit to start off with a topic on leases, because I believe that leases is going to be the one with the most significant impact. And let me start off the discussion with leases very simply. If you look at the financial statements of airlines, what is the asset that you don't find on the balance sheet? If you look at many Far Eastern airlines, the asset that you don't find is, guess what? Aircraft. Where are the aeroplanes? Where are the aeroplanes? I flew in on Emirates Airlines. In the magazine, the in-flight magazine of Emirates Airlines, they say that they have 254 aircraft in their fleet. Do you know how many make it to the balance sheet? 104. Where are the other aircraft?